Namaste and welcome to part C of funds flow under simple solution series. This particular problem is from page 294 under illustration 16, and this problem has got three unique features. One, there is purchase of fixed assets by making bank payment, that is number one. Number two, there is purchase of assets of another company by issuing share capital, and the assets include both current assets and fixed assets. And number three, it has got provision for taxation, which has got an item indicated in the adjustment as payment. Once there is a transaction in the adjustment, it is always advisable to keep provision for taxation outside the scope of working capital. These 3 points we will be learning how to treat in this problem. And to have a repetition, our first statement of changes in working capital, it confines to current assets and current liabilities. And second statement of funds and operations, as we have seen, it excludes non-cash depreciation, transfer to general reserve, write-off of goodwill, write-off of preliminary expenses, and at the same time, investment and financing transactions like dividend received, interest received, dividend paid, interest paid, and along with that, it will also have profit or loss on sale of fixed assets. These items will be considered in the statement number 2, and funds flow will consider the end result of cash flow, that is working capital changes, profit and loss adjustment account, and then it will look into changes in the financing and investing items, and that will be the funds flow statement. Let us start from the beginning. Under initial review, 2015, column number 1 is previous year, 2016 is current year. Amount, we have to take it as absolute rupees. And under working note, as we have seen discussed in the previous one, stock 21,640, machinery 18,360, goodwill 10,000 were purchased by the company by issuing capital of 50,000. Assets of another company purchased including stock, machinery and goodwill payable in fully paid shares. How do we treat it? Number 2, income tax charged to provision. Charged means it is paid. It says here income tax during the year amounting to 28,770 was charged to provision for taxation. Means provision for taxation to bank account is what we paid during the year, 28,770. For that we have to prepare income tax account. And here there is one special item which is given at the end. Net profit for the year before tax is 76,300. One point you have to remember, we have got in the balance sheet an item called profit and loss account. We will be starting 39,690 as the opening balance, 41,220 as the closing balance. Whatever differential transaction comes, we will be accounting, and we need not have to be unnecessarily worried about this one particular item which is given by them. It is a summation of a few items which could be conveniently ignored. Otherwise, we will be getting unnecessarily confused with the issue. This is the summary of a few points from the initial review. Based on the adjustment, we will be preparing accounts which are affected by the transactions listed therein. One for purchase of assets, second for payment of capital, and provision for taxation. These are the 3 accounts. Goodwill account we are not preparing because there is only one transaction of issue of capital. Let us get going. Opening and closing balance of property 148, 144. Opening and closing balance of machinery 112,950, 1,26,200. Then we have got shareholders account opening 220 and 270 is the balance carried forward. 50,000 issued during the year. Provision for taxation opening is 40,000 and closing is 50,000. Then we have got a transaction which involves purchase of assets from another company, stock 21,640, machinery 18,360 and goodwill 10,000 totaling 50,000, and that finishes the share capital account. Out of that we take the balance pertaining to machinery account 18,360. We have not prepared goodwill account. Stock account need not be prepared for the simple reason it is already covered under working capital changes, because this 21,640 is already considered as a part of stock which is indicated here as 90,000, 92,000. Since it is coming on a net off basis, we should not consider preparing a separate account for stock. It is only for issue of capital we are taking here into account under capital account. From there, we have got taxation, which says during the year an amount of 28,770 was charged to means provision for taxation account to bank account 28,770, and depreciation is indicated as 4,250 in respect of property, and it also talks of purchase of property in addition to a plant at a cost of 5,650 to bank account. 5,650 we have paid. Then if we take opening balance 112,950, 18,360 and this total is 136,960, and it is also indicated here that the depreciation involved with machinery is 10,760, which totally balances the account. There is no missing item in machinery account. There is no missing item in property account because it is all matched, and there is no difference in share capital account except for this 50,000. We have a difference only in provision for taxation account, that is 38,770. Opening balance, closing balance, payment made during the year. Therefore, provision for income tax to be debited to profit and loss account is 38,770. This will go into profit and loss adjustment account as a provision. Now we will be preparing calculation of changes in working capital. Simple and straightforward. We have got the list of current assets, stock, debtors, cash at bank and prepayments. All the four are posted. Then we have got current liabilities. We don't consider here, as discussed, the provision for taxation account. It is treated separately. We take creditors, bills payable and bank overdraft. Just to see, bank overdraft was 60,000 and the entire amount is paid out. At the end it is 0. And as we see here, now out of this 2,01,000 last year current assets, this year 173, we have realized 27,600 from out of current assets, means it is an inflow. Under current liabilities we had a borrowing of 132,790 short term, and it has come down because we have paid out 80,000. We recovered 27, we paid out 80, difference is 52,000, which is increase in working capital. Means increase is nothing but outflow. It is funds outflow. Working capital involves requirement of funds to the extent of 52,530. And as we have seen, provision for taxation we will not be considering here. We have already considered it separately. Now we are going to profit and loss adjustment account, wherein we will be treating certain special items which are non-cash: depreciation on machinery, depreciation property. We are considering tax and any change in the reserve, general reserve, and financing items like dividends. These are the 5 items available here. We can simply start posting it. Reserves 30,000 has been increased to 40,000, means there was a transfer of 10,000. We have opening balance of 39,690, closing balance of 41,220. We just make the postings of those two items. Then during the year, a dividend of 26,000 was paid. Therefore, two dividends, 26,000. It is provision for dividend. Then depreciation, two items are given: property 4,250, machinery 10,760. We are writing it back. With this, we have posted all items except one. We have provision for income tax, which is not available here. We have got only payment. We proceed further. We go to our adjustment accounts prepared. We had one missing item which we found out. We post that item here. That completes profit and loss adjustment account, and we have got funds from operations at 91,310, and that will be. Now we are at the third statement of funds flow statement. We first take the calculation of changes in working capital. There is a increase in working capital. We make the posting as an outflow, working capital outflow 52,530. That done, we go to second statement, profit and loss adjustment account. There we have got by funds from operations 91,310. We post 91,310. With that, we go back to the problem to find out asset wise what was the inflow and what was the outflow. As we saw, 220 became 270 when we purchased the stock and other assets. We issued capital of 50,000, that is posted here. Then we have got dividend paid 26,000. We purchased machinery worth 18,360, and we purchased goodwill worth 10,000. Machinery purchased against payment is 5,650. We made a payment of 28,770. This is a simple funds flow which has taken care of capital raised and the payments made. And as we see, once we post everything, we have got the sources and applications matching with each other. And just to put all the four together, starting with our initial problem, we prepared the working capital statement, then we prepared the profit and loss adjustment account. Based on that, we prepared the funds flow. Having an overview of all together, we posted funds from operations. We posted the increase in working capital or outflow. Then we posted all payments from the exercise which was given. We had the exact matching of both sources and applications. It's a simple. Only thing that we learnt in this case was how to treat when there is a purchase of current assets and fixed assets against issue of capital, and purchase of fixed assets and payment of taxes outside as an adjustment. Then we remove profit and loss provision for taxation out of current assets. That's it. Congratulations. Thank you so much. Thanks a lot.